Hello, I'm Chris Leach, leader of the Social Credit Party. I wanted to tell you about a conversation I had at a funeral a few days ago. The funeral was for a 94-year-old, a guy who'd had a pretty good innings really, and he'd been a very, very knowledgeable social creditor for most of his life. In fact, his parents before him were social creditors going right back to the Depression of the 1930s. I'd had a few words to say at the funeral, which is appropriate, and afterwards, when everyone was standing around having a cup of tea and a few nice nibbles, this guy came up to me and said, "You must be very pleased that the government is using social credit policy to fund its economic recovery package." And I said, "Really? What makes you think that?" And he said, "Well, isn't the Reserve Bank creating a whole lot of money and then the government is using that to fund its wage subsidies and so on?" And I said, "Well, no, not really, actually. Let me tell you how it's working right now. The Reserve Bank is creating $60 billion, something most people didn't think was possible. And of course, that is social credit. But what it's doing with that money is it's buying existing government bonds, so that's government debt, off banks, rich investors, pension funds and other speculators. And of course, with all that money that they've now got, created by the Reserve Bank, they're looking for some more investments, and so they are buying new government bonds that the government is issuing. That's effectively the government borrowing off those rich investors. And it's that money that the government is using to fund its economic recovery package. Of course, the problem with that is that you and I and every other taxpayer in the country, and probably our children and grandchildren, are going to have to pay interest on that government borrowing to those rich investors. And when the loans come to the end of their term, or if you like, when the bonds mature in fancy economic terms, it's us taxpayers that will have to find the money to pay back those rich investors. So instead of our taxes going for hospitals, education, building houses for people who don't have them, maybe providing free bus services in urban areas, for environmental restoration and so on, all of the things that are really important for Kiwis, instead of our taxes going for that, which is what we think we pay taxes for, a chunk of it is going to go to rich investors. About $5 billion a year, in actual fact. Now, what social credit policy is for the Reserve Bank and the government to get together, and for those $60 billion that the Reserve Bank is creating to instead be put straight into the government's account, which is at the Reserve Bank anyway, by the way, because the government owns the Reserve Bank, and so there'd be no need for interest payments or no need for the loan to be repaid. I mean, why would it? The government is effectively borrowing from itself. It's like you having two bank accounts, a savings account and a transactions or working account. And if you wanted to buy something and there wasn't quite enough money in your working account, you'd borrow some from your savings account. Well, you could pay it back, I suppose, if you wanted to, no reason why not, but you don't have to, because both accounts are your money. And that's the way it could work with the Reserve Bank and the government. And that is social credit.